In this video, I'm going to teach you my favorite and one of my most profitable scalping trading strategies that work on gold. Now, this strategy is making me so much money. It is making my private members so much money that it's insane. It's very easy. It's the most mechanical trading strategy that you can use. I uploaded this strategy 8 months ago on my YouTube, and it is now just around 500,000 views. And the reason why it got so many views is because it works for a lot of people. Okay, so let's get right into this video without wasting any more time. Okay, so this is 1 minute scalping trading strategy that works on gold. I do not trade anything else other than gold with this strategy. So the very first thing that you have to do is you have to set your time zone to New York UTC 4. Okay, this is very important. Now the timings here that I'm going to mention are going to be New York time. So that is why we have to set that. Now, what we will have to do is go to the 15-minute time frame, right? So let's just go to the 15-minute time frame here. All right, cool. Now, before the 8 p.m. open, which is the beginning of Asian session, right? What you have to do is identify the most recent low and the most recent high before 8 p.m. Okay, now all you have to do is mark out the most recent low and the most recent high that formed before the 8 p.m. New York time. Now the next step is the easiest. All right, all you have to do is after 8 p.m. open, you have to drop down to 1 minute time frame. So right now we're on the 15, you want to go to the 1 minute time frame, right? And what you have to do is you have to wait for price to either sweep out the most recent low or the most recent high. So let's assume that price takes out the most recent low. Now, from here onwards, what you have to do is look for a market structure shift to the upside with displacement. And a market structure shift with displacement is called a break-in structure where it has a fair value gap. So there must be a fair value gap, right? So this leg broke the structure, so hence we got a market structure shift. But for it to be a valid market structure shift, it must have a fair value gap. All right, it could be here, it could be here, it could be here, it doesn't matter, but it must have it. Now, the fair value gap must form before the market structure shift. It cannot form above the market structure shift. So right here, where you can see we got a market structure shift, right? It should not form here, right? Because we are not going to use that fair value gap for our entry. It must form below the market structure level, market structure shift level. I hope that makes sense. Now, the next step, very easy stuff. What you have to do is take your entry from that fair value gap, right? And basically you can target the most recent high that formed before the 8 p.m. open, right? Or what I do is I go for 1 to 3 for this strategy, because when you get this setup right, you will get 1 to 3 with ease. Like price is going to push up with high volume. Okay, this is pretty much the entire setup, but I'm going to teach you some steps that can actually help you improve the win rate as well. So the very first thing that you have to do to improve your win rate is basically identify the order flow on the 4-hour time frame. Are we going up, right, on the 4-hour timer? If we are, what you have to do is look, are we in the premium or the discount of this dealing range? So you're going to use your Fibonacci, right, on the 4-hour time frame, and you have to look, okay, are we below the 50%? If we are, then we can look for longs. So we would look for a sweep of the low here, okay? But this part over here, it is not necessary. But what it's going to do is going to increase the win rate. You can use this model by itself. And I promise you, my members in the Discord server have been using this model. And all the people that watched the video that got around 500k views so far, they've been using this model and they have been making shit ton of money. All right, pardon my language, but yeah, I have to say it's the easiest, the most mechanical strategy that you can use. And this was it is my model. A lot of people on Instagram, they don't give me any credits, and I don't care. Okay, at the end of the day, it's all ICT, but I know if someone is not giving me credit, okay, you're not a good person. I'm kidding. All right, so let's suppose that we are here, right? You then look for this setup. But let's suppose that we are above the 0.5 level. We can expect a retracement at least to 0.5 level. So we're going to look for shorts. When price is below the 0.5, we're going to look for longs because price is in the discount, right? Very simple stuff. So now what's going to happen, you have to watch this very carefully. And I'm going to give you guys a lot of examples, so don't worry. Now, sometimes price will not retrace back into this fair value gap. So what you can do in that case is use a breaker block if you don't want to miss out on an entry, because it's going to happen, okay? So you can use a breaker block for your entry, and it's going to provide you with entries most of the time. So the point here is that you do not miss the entry, because you're gonna be very angry when price just taps into a breaker block and then it just rushes up to the upside like with insane momentum. All right, so you don't want it. So just take your entry from a breaker block. That is like your best bet here. Okay, now similarly it will look the same. You know, we have the 8 p.m. open here. We mark out the most recent low and the most recent high before the 8 p.m. open. And let's say that the order flow is bearish, right? And we are in the premium. We want to wait for price to sweep some form of buy side liquidity. And in this case, it will be the most recent high just before the 8 p.m. open. And we want to look for the sweep after the 8 p.m. open. So when we have a sweep, right, we can look for a market structure shift with displacement, and we can take our entry from a breaker block, or if you want to increase your risk to reward ratio, you can use a fair value gap. Very, very simple stuff. Now, another thing that you can do is basically use standard deviation to basically identify. All right, let's just do this. Okay. And I'm going to do this. So watch this very carefully because it's going to help you become a better trader. Okay. So what you can do instead is use standard deviation projections to correctly identify the manipulation phase. So when we have a sweep, if price taps into -2 and -2.5 or -4, then that is a valid reversal level. And from there, price, you should be like 100% sure, okay, price reversal. But again, it is not necessary. I'm giving you some tools that can help you to increase your win rate. Now, it doesn't mean that you have to use these bonus tips to trade. Okay, you can just keep this as mechanical as possible and trade, and I promise you, you're gonna make a lot, and I mean a lot of money. You're gonna pass your prop from challenges. Trust me, guys, I'm gonna give you guys some examples. This happens every single day. All right, and again, if someone is teaching you this exact model, it's not theirs. They're gonna pretend like it's theirs, and they're gonna create a course on this, and they're gonna sell. But I don't care. Okay, just you can call this the I don't know, the fast Midas model. Let's call it Midas model. Okay. So now I'm going to give you guys some examples, and then I am going to end the video. All right, everybody. So here is example number 1, looking at gold, of course, on the 15-minute time frame at 9:45. All right. So what is the most recent high here? It is this. Okay. What is the most recent low? It is just around here. Okay. So I'm going to mark that out. Now, what I'm going to do is I'm going to go to the 1-minute time frame here. Very simple stuff, right? And let's see what happens. So price sweeps the most recent high. Now, what we have to do is look for a market structure shift with displacement. And right there, what do we have, guys? We have a market structure shift, okay? Now, before that, before the market structure shift, we formed this fair value gap, right? And we also have this fair value gap. So that is what's called displacement. If there's no fair value gap, that is not displacement. All right. So now in this case, what we have is a fractal breaker block. It is not the, I would call a breaker, but on the lower time frame, this is a breaker block. Now you could take your entry, your low risk entry from this breaker block, but the real breaker block is somewhere around here. Okay. So you just have to be very careful in identifying these. So yeah, you could have taken your entry here, but over here, what you can see, we broke through the breaker block. So now what I'm going to do is going to wait for price to come back into this breaker block. I'm going to put my stop above the breaker block, and we can go for 1 to 3, as simple as that. So let's see how this plays out, guys. So price moves around here, taps right into the breaker block, and now you're going to see how price moves toward TP. Okay. Keep watching. Keep watching. It's going to go up and down like that, but you don't have to worry, okay? Because when this setup plays out, it's gonna give you 1 to 3 minimum, and I'm talking about minimum here. If you took your entry from here, it would have given you, let's say we put our stop here, right, somewhere around 4. So yeah, you can see how this plays out. Now, one thing I'd like to say is if the draw on liquidity, which is the most recent low, is hit before your entry, then the probabilities of setup decrease. Okay, there's nothing that I can do about it. Is how the setup plays. Okay, I didn't engineer this model. I just know this model. I hope that makes sense. So yeah, just be careful here. Now let's move on to the next example. All right, everybody. So here is example number 2, and we are at 9:45, actually 9:59. Looking at gold, of course. So now what we want to do is mark out the most recent high and the most recent low. Simple as that. No need to overcomplicate things. So this is the most recent low, and just around here we have the most recent high. Now I'm going to go to the 1 minute time frame, and I'm going to see what happens. Okay, so let's see. The 8 p.m. opens here, waiting for price to sweep either the low or the high, and there we have the sweep of the low. Now, what do we have? We have a market structure shift, but we want to see a fair value gap, right? And it forms right here, just below the market structure shift level. Okay, now what do we have here? We have a breaker block, very nice, and we also have a fair value gap overlapping with the breaker block, so that makes it a unicorn model. So we can simply take our entry from the breaker block, put our stop right below this level, and we can go for 1 to 3. Now, what about the break-even rules? Because I know some of people left the video after watching the first example, but the most important thing, risk management, you got to go break-even at 1 to 1.5, and you can take a partial at 1 to 2 to secure in some profits, because very rarely you will see that price will go to 1 to 2 and then reverse, okay? Or if there is a very significant CB, sell side, it's just best to just take one partial, small partial, and go break even at 1 to 1.5. Or if you want to be very, very like secure, then go break even at 1 to 1. So now we're going to go for 1 to 3 here, and let's see how this plays out. We have our entry. Price just pushes and rushes towards our take profit level. This model is crazy. When I said this before, but when it plays out perfectly. Okay. Yeah, so let me give you guys one more example, and then yeah, that would be it. All right, guys, here is the last example. At 9:50 now, we are here, gold, of course, and I want you to identify the low and the high. I'm going to give you guys 5 seconds. 1, 2, 3, 4, 5. Now, if this was the most recent high for you, and this was the most recent low for you, congratulations, you have understood the video. Now, what we want to do is drop down to 1 minute time frame. Perfect. And now we want to wait for price to either take out the high or the low. So we took out the high, very simple stuff. Now we are looking for a market structure shift. Very simple stuff, guys, right? Want to wait for a body closure. This is very important. So we have a body closure right there. And what do we have right here? We have a breaker block, guys. Very simple stuff. So that is going to be my entry. I'm going to put my stop just slightly above this fair value gap because this fair value gap is tapped. So I want to be very careful about this. We have this auto block as well here. So just want to be very careful here. Now we can go for 1 to 3, and we are already in the trade. So let's see how this plays out. Oh my God, guys. Do you see the power of this strategy? I told you when it plays out, it plays out. Now it's going to play out like this when we have equal lows, relative equal lows, or very, very clean draw on liquidity. For example, here, right, we have these equal lows, relative equal lows here, right? Just look at the previous day's price section as well to get some context about the price, like what's it supposed to do, what it's doing, what it's coming from, what it has been doing the previous day, just use your trading skills as well. But at the end of the day, you want to keep this as mechanical as possible. And yeah, guys, thank you so much for watching this video. I'll see you guys next time. Goodbye. Take care.